What if I told you one of the most hyped startups of the 21st century didn't invent new tech, didn't sell software, didn't make a dime of profit, and yet still convinced Wall Street it was worth nearly $50 billion? Sounds wild, right? This is the story of WeWork, a company that wrapped real estate in Silicon Valley buzzwords, pumped it full of investor cash, and nearly took the global economy for a ride. It had celebrities. It had billion-dollar backers. And at the center, a CEO who talked like a messiah and acted like he was allergic to accountability. Let's unpack how a glorified office sublease business became one of the biggest startup implosions in history.
Co-founder and CEO Adam Neumann.
WeWork was valued at $47 billion.
WeWork began in 2010, co-founded by Adam Neumann, a tall, charismatic Israeli entrepreneur with surfer hair and the ego of 5 Elon Musks, and Miguel McKelvey, the design brains behind the operation. The idea was simple: rent big spaces, make them look cool, chop them into micro-offices, and sublease them to startups for a premium. A real estate hustle. Dressed in Patagonia and pretending to be Google. But here's the kicker. They didn't call themselves a real estate company. No. That wasn't sexy enough. They said they were a tech platform for elevating human consciousness. Investors ate it up. Investors weren't just buying into a shared office space, they were buying into Adam Neumann's vision of a global empire. He said WeWork wasn't just about buildings, it was about community, spiritual well-being, and reshaping how we work and live. He even started We Leave, We Grow, and talked about WeBank. If it had a noun, Adam was ready to slap a we on it and raise $100 million. And then came the big guns. Masayoshi Son, founder of SoftBank, the man who once turned $20 million into $50 billion with Alibaba. Now Masayoshi Son isn't some average investor. So when he gets excited about something, people pay attention. And with WeWork, he wasn't just excited, he was obsessed. He saw Adam Neumann as the next Steve Jobs, the kind of visionary who could reshape how people lived and worked. So what did he do? He handed Adam what might as well have been a blank check. In fact, during one meeting, Son reportedly gave Adam Neumann $4.4 billion in just 28 minutes. 28 minutes. You can't even get through airport security that fast. And the cash didn't stop there. SoftBank would eventually pump more than $10 billion into WeWork. With that kind of backing, Adam and his team were unstoppable. Or at least, that's how it looked. At its peak, WeWork was valued at a jaw-dropping $47 billion. That made it more valuable than companies like Airbnb and SpaceX. All for a company that rented office space. Imagine slapping a sticker on your Honda Civic and convincing people it's a Tesla. That was WeWork. They claimed they were a tech company because they used apps to open doors. By that logic, your garage door opener is a startup worth $12 billion. But here's the problem. While the valuation skyrocketed, the math never did. WeWork was bleeding billions every year. They were signing huge long-term leases and then subletting those spaces short-term, which made them incredibly vulnerable if the economy dipped or demand slowed. But instead of slowing down, they did the opposite. They expanded fast and into things that had nothing to do with co-working. Private schools, co-living apartments, even wellness retreats. The whole thing started to look less like a business and more like a delusion funded by billions of dollars. And no one seemed to be asking the hard questions. Behind the scenes, things were starting to unravel. And not in a subtle way. Adam Neumann, the so-called visionary founder, was quietly cashing out his own shares, taking money off the table while the company itself was still bleeding cash. That's usually a red flag for investors. Founders are supposed to stick around and grow the company, not treat it like an ATM while it's still losing billions. And then came one of the strangest moves in startup history. Neumann actually trademarked the word we. Yes, the word we. And then sold the rights to that trademark back to WeWork for $5.9 million. Think about that. He made the company pay him nearly $6 million just so it could use its own name. If that sounds ridiculous, that's because it was. That's like naming your kid Steve and billing them monthly for trademark usage. And somehow, the board was okay with it. The company culture was no better. In fact, it was pure chaos. While employees were grinding long hours, Neumann was flying around the world in private jets, partying like a rock star, and giving off-the-wall spiritual pep talks to his staff. Some people said it felt less like a workplace and more like a cult. There were tequila shots being handed out at company meetings. Weed was reportedly smoked on the company jet. Leadership decisions felt impulsive and inconsistent. It wasn't just unorthodox, it was unstable. But all of that might have stayed hidden behind the scenes until WeWork decided to go public in 2019. That's when everything came crashing down. Because once they filed their IPO paperwork, investors and analysts finally got a look at the real numbers. And what they saw was terrifying. In the previous year alone, WeWork had lost $1.9 billion. There was no solid plan to turn a profit. No roadmap for long-term sustainability. Just massive losses and even more massive spending. Worse, the IPO documents revealed just how tangled things had become. Neumann's personal behavior and financial conflicts were out in the open. Everything from self-dealing to bizarre decision-making. Investors who had once been dazzled by the company's cool factor now saw it for what it was. An overhyped brand with a shaky foundation and a CEO who looked more like a liability than a leader. Wall Street didn't just lose interest, they ran the other way. The IPO completely collapsed, and it happened fast. In a matter of weeks, the excitement turned into disaster. Investors who once thought WeWork was the next big thing quickly realized it was built more on hype than solid numbers. The company's valuation, which had been a jaw-dropping $47 billion, crashed to less than $10 billion almost overnight. That's not a dip. That's a free fall. And at the center of it all was Adam Neumann. Under intense pressure and mounting criticism, he was finally forced to step down as CEO. But here's the part that really stings. Despite all the chaos he caused, Neumann didn't walk away empty-handed. Far from it. He walked away with a $445 million golden parachute. Meanwhile, thousands of employees lost their jobs. Their stock options became wallpaper, and the company was on life support. SoftBank, the Japanese investment giant that had been one of WeWork's biggest backers, had to swoop in and clean up the mess, losing billions in the process. And just like that, the dream died. WeWork went from being Silicon Valley's golden child to the poster child for how fast things can fall apart when no one's asking the hard questions. So what happened next? Well, after all the dust settled, WeWork did eventually go public, but not the way it originally planned. Instead of trying the IPO route again, which had turned into a total disaster the first time, it took a shortcut. It merged with a SPAC, a special purpose acquisition company, which is kind of like a backdoor way of getting on the stock market without going through all the scrutiny of a traditional IPO. But by then, the damage was done. The company that was once valued at $47 billion now dropped to less than $10 billion. But here's the wildest part. While WeWork was still trying to pick up the pieces, Adam Neumann was already back in the game. And not just any game, real estate again. He launched a new company called Flow, promising to reimagine how people live and rent. Sounds familiar, right? And believe it or not, investors lined up again. Some people, despite everything, were still willing to bet on him. In fact, Andreessen Horowitz, one of Silicon Valley's biggest venture capital firms, handed Neumann a massive check, reportedly over $350 million, to build Flow. The same guy who led one of the most high-profile startup crashes of the decade was now being backed to do it all over again. It's like startup déjà vu. WeWork is a painful reminder that not everything that glitters is gold. Just because something is hyped doesn't make it safe. The smartest people in the room can still get it wrong when they chase hype over fundamentals. So next time you hear about the next big thing, take a breath, look at the numbers, and remember what happened to WeWork, the most dangerous investment ever sold. If this breakdown saved you from investing in the next disaster, hit that like button. Let us know in the comments. Was WeWork doomed from day one, or just badly led? And don't forget to subscribe, because we're breaking down the biggest wins, the biggest losses, and the biggest egos in business. See you in the next one.